Hi guys, today we're going to be talking about the Bitcoin halving of 2020. The majority of crypto enthusiasts I spoke to have two major questions. First of all, what the hell is a Bitcoin halving? And secondly, how can they make a lot of money on that mysterious Bitcoin halving? First of all, what is Bitcoin halving? Let's take a quick history lesson. Bitcoin was launched back in 2009. Back then, it was possible to mine Bitcoin with normal desktop computers. All of us wish we have done that. And amongst other features, Bitcoin network had the following three. First of all, the total supply of Bitcoins was designed to be limited to 21 million Bitcoins. Secondly, 50 Bitcoins were mined every 10 minutes, meaning the block reward that goes to the miners was at 50 Bitcoins per day. And finally, the block reward was designed to be halved every 210,000 blocks. So let's take a look at these numbers closely. There are 1440 minutes in a day. Let's divide that by 10 minutes because every 10 minutes there is a new block of transactions and we get 144 daily block rewards. Again, there are 210 block rewards between halvings. If we divide that by 144 daily blocks, we get roughly 1458 days that it takes to get to the very next halving. 1458 days is about 4 years that it takes to get to the point when the reward is cut in half, hence the term halving. Let's take a look now at the Bitcoin halvings that have already taken place. The first one was back in November 2012. The block reward of 50 Bitcoins was decreased down to 25 BTC. So after that, miners started making 25 Bitcoins every 10 minutes as opposed to 50 Bitcoins. So here's the price of Bitcoin around that time, around 2012. Halving took place in November 2012, and boom, 12 months right after the halving, 8,000% gain, and then 18 months after the halving, 4,500% gain. Not bad at all. July 2016, the Bitcoin reward dropped from 25 Bitcoins down to 12.5 Bitcoins. So here's a price chart again. Here's a halving in July 2016, and boom, 12 months from there, 280%, and then boom, 18 months from there, 2,000+% return on that. So pretty freaking wow, right? So many experts out there expect that after May 2020, when the reward will drop from 12.5 down to 6.25, we're gonna have something like this. We're gonna have lots of Lambos, we're gonna have the moon, rockets, and obviously unicorns and rainbows. So that's the expectations. But these expectations might not necessarily be real, so let's just take a much more realistic point of view. So here is the Bitcoin halving Google Trends. Most experts are looking just into the last two halvings of Bitcoin. So the first one, which is November 2012, is not on this chart. The second one is July 2016. We see the spike. The upcoming Bitcoin halving in May 2020, we see the spike is coming up. But what about that little spike in between right here? That's Litecoin. And Litecoin just experienced halving in August 2019, which is just 6 months ago. So the majority of experts don't even look at the Litecoin, but now we have at least 3 data points to consider. So halving is defined. It's not that it's like, just a random day and all of a sudden there's a halving. No, halving is pretty much determined way before it happens. So therefore, it's fair to take the price action before the halving and right after the halving. So if you look at 3 months before halving and 3 months after the halving, here we see for the 2012 one, we see almost 700% gain within those 6 months, between 3 months and 3 months. For July, we see 47%. And Litecoin halving, boom, negative 20%. So while the short term is kind of expected by everybody who wants the price of Bitcoin to go to the moon, just like myself, but we still have to take a realistic view. Litecoin did not go to the moon. Litecoin actually dropped by 20% within those 6 months. Now, the 6 month and 6 months, 6 months before the halving and 6 months after the halving, the situation looks a little bit better. So in the 2012 halving, traders could have experienced about 2,400% return. For the July 9, about 100% return, and for the August, in the Litecoins, traders and investors could have made about 60% 5% return. However, those 3 data points are showing us the following. There is not a clear trend. The gains are not very consistent. So the question is, can it be that those price appreciations that we've seen are not due to halvings, but just due to the fact that Bitcoin by itself is very strong, because Bitcoin network is really, really amazing. And here are the data points, right? So, the hashing rate has been steadily increasing. The unique addresses number has been increasing slowly but surely, and the blockchain unique wallets is exponential in nature. So the question is blockchain halving a non-event? Non-event meaning that what if blockchain halving just does not influence the price at all? And to answer this question, the majority of experts out there put the following 2 factors. The first factor is the Bitcoin network ecosystem, and the second factor is supply and demand. So let's look at the first factor first, the ecosystem. So if you simplify the Bitcoin's ecosystem, there are literally 4 types of players: developers, users, investors, and obviously miners, who will get screwed the most, because guess what? The reward drops in half, so therefore it's going to be much more difficult for miners to catch up and be profitable, and that's not far from the truth. But let's look at November 2012, right? So November 2012, the halving happened right there. As you can see, there's a slight drop. Actually, relatively wise, the drop was pretty significant. But then, about 12 months later, it recovered, pretty steadily, all-time highs. Now, July 2016, pretty much the same story. So here, the halving happened. Slight drop in hashing power as the network was adjusting to it, and then boom, we have the rise. So from the ecosystem perspective, what we can expect is a slight short-term weakness to the price of Bitcoin. Now let's get to the second point. The second point is the supply and demand. So supply and demand factor, the supply and demand theory goes like this. Listen, since fewer Bitcoins will be mined, fewer Bitcoins will be available as a supply, but the demand grows. Since demand grows and supply is limited, the price will keep growing. So that's kind of the theory. Let's look at this theory in more detail. There are overall 21 million Bitcoins that could be created ever. And, this theory is not far from the truth. Right after the first halving in November 2012, the supply has been steadily kind of like it's pretty much has been consistent, but at a much flatter slope. And then right after this, that's yet another slope after halving of 2016 in July. And then the expected flattening that will take place in May 2020 is also pretty obvious. Yet there's another piece of research conducted by On-Chain Capital, which is very, very good. So they analyzed all the Bitcoins that are held on the wallets, and they found out that almost 60% of wallets are just holding Bitcoins for 1 year or more. So for 12 months or more, those wallets show no activity of transferring funds, which is great. Plus, don't forget, 20% of Bitcoins are being lost due to poor security protocols, and chances are these numbers will pretty much be, stay the same. So more and more Bitcoins will be lost. So overall, this theory says that, because of supply and demand, the supply is very, very tiny. It's minimizing as time goes by, but the demand is growing because everybody's realizing how amazing Bitcoin is. So therefore, this is a bullish factor. Is that it to this video? No. We would like to take an alternative view. And I'm pretty sure some other videos on YouTube and some other webinars and some other materials out there are covering those 2 factors that we're going to be describing today. But we are going to be looking more from the statistical perspective into those 2 factors. So May 2020 halving will have the following 2 things. The reason why it's going to be different from the other halvings are for the following 2 reasons. The first reason is it is going to happen in May 2020. And if you guys are in the space for quite some time, you do realize the importance of the month of May for the entire crypto space. So here's the analysis of a month-by-month average return of BTC over the course of the last 10 years from 2011 to 2020. As you can see, April, May, and November are showing some amazing returns. And these are, again, average returns. Just to be fair, So April is showing 40% return, May is 41% return. Just to be fair, let's remove the outliers. So after the outliers are removed, we still see that April and May are performing extremely well, 19% per month on average in April and 18% per month in May. And the standard deviations for those 2 months is actually very, very good as well. It's pretty, pretty tiny relative to the other months. So it's not that it's guaranteed to make 19 and 18% per month for those 2 months, but it's a good statistics to know. So if you look specifically into April, for example, so here's the pretty much April return since 2012 up until 2020. So the expected average return for April of this year was supposed to be 19%, and we got 17% gain this month of April in April 2020, meaning that we are pretty close to the historical average. So we don't know what's going to happen in May. We not future seekers. We don't know exactly. We're not prophets, but the average return for May is predicted at roughly 18%. It would be nice if this May we see an 18% spike. So again, the fact that the halving is happening in May has this magical meaning because May is a magical month for the whole space. Now, 18% per month, is it a lot or not a lot? If you multiply that by 12 to get the simple annualized interest rate, interest gain of 216% per year, meaning you can pretty much invest $10,000 and make $20,000 of pure profit, which you then probably have to pay tax on. So pretty high return if we are looking at 18% per month. So that's the first reason why May 2020 halving might be different from the other halvings that we've seen before. Now, the second very important reason is global recession. So this is the S&P 500 chart since 2010. The first halving, November 2012, market is bullish. The second halving of July 2016, market is very freaking bullish. And what's going to happen soon? The May 2020 halving. And guess what? It's happening right around this huge, massive economic meltdown. So not only that, S&P 500 only performed at 126% since 2012 of the cumulative gain, and Bitcoin delivered all the believers and the holders and crypto enthusiasts almost 200,000%. Think about this, 200,000%. But also, if you look at the year-to-date performance since January 2020, if you look at pretty much how the world performed, we look at crude oil, it's down 64%. We look at S&P 500, it's down 12%. Gold, which is the safe haven, the safe haven since ever, it's up 12%. And BTC, an emerging asset class that lots of traditional investors are still pretty much bidding up and saying how it's not, this and how it's not that, it's up 23%. It's double what the most traditional safe haven asset of gold has been performing since January 2020. So that's a very, very good sign. So what have we learned today? Again, the future cannot be forecasted by the past. So anything can happen in the future, but we do have some factors, and it's good to draw this 2x2 matrix where the x-axis is negative versus positive impacts, and the y-axis is short-term versus long-term impacts. And the following factors could be placed on this matrix like that. So for the negative short-term impact, we have hashing power drop, which probably gonna happen, and the network will have to adjust to this. For the long-term positive, we have a limited supply, and that limited supply is pretty much built into the original design with the 21 million coins available, but it's also being enforced by the fact that people constantly lose bitcoins. Some bitcoins are being stolen, and the supply of bitcoins will be minimized with the halving. Then the other one, we have the short-term positive impact of May 2020. So May overall is a very bullish, positive month for the entire crypto space. And in the past, in the last 10 years, the May has experienced tremendous gains on average. And then we yet have another long-term bullish factor of a global recession. So global recession, people realize that maybe stocks are not such a good asset. Maybe gold is not such a good asset. Maybe commodities, which are pretty much never assets, they're typically used for hedging, but maybe they're not good investing assets. So maybe Bitcoin is a good alternative to what we are seeing right now, to the traditional investments. So overall, if you like our analysis, please like this video and subscribe to our channel. If you would like to join a group of like-minded individuals, crypto enthusiasts, crypto junkies, check out our Telegram group. You can find the link to our Telegram group in the description below. Thank you very much for watching. Have a good day. Bye.